Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? Mr. Fit to Flourish here, and today I wanted to talk about how to read price action, a crash course, the basic stuff that you need to know, and then I'm going to go kind of a little bit more advanced so that you can see things and understand them. Okay, but we're going to start off extremely basic. Let me share the screen and get right into it because I'm not a yapologist. All right, let's get into it. All right, so the first thing you need to know about price action when it comes to trading, investing, all that goody schmutty stuff. The first thing you need to know here is a boom. All right, what are candlesticks? Candlesticks are how you read the charts. The charts are Japanese candlestick charts. So let's get into it. The green bars show that price is going up. Red bars show price is going down. How? So the open, and remember there's different time periods, time sessions is what it was just called, is that you look at. So for instance, if you're looking on daily time periods, then every bar is going to represent price movement for a day. If you look on the 2-hour time frame, then every bar is going to represent a two-hour block. Okay, so no matter what the block is, you read these. No matter what the time frame is, you read these candlesticks the same. So the open is that flat bottom part of the rectangle, and then the close of that session is that top part. So for instance, let's say we start trading at 1 p.m. Okay, 1 p.m. This session, and it's a 1-hour bar. Okay, this session at 1 p.m. opens here. For some reason, we came down all the way here at some point during that 1 hour, and then some point of that 1 hour we came all the way up here. But when that 1 hour is done at 2 p.m., this is where we closed. Okay, so we opened here at 1 p.m. and then 2 p.m. we closed right here. But during that time period, we went as low as here and as high as here. So those top and bottom stick parts are called wicks. Okay, these are the bodies. The rectangle parts are bodies. These skinny parts are called wicks, and they basically show you the extremes of how far up, how far down we went during that time period. But essentially, the flat part at the bottom is the open, where price started at the open, and then where price closes at. Okay, and this is just the opposite for red bars. So we start up here, and red bars depict price coming down. So we started here, and then we ended lower. So 1 p.m. we started here. And then 2 p.m. we closed down here. And at some point we went as low as here during that time period, high here. Okay. So these, again, skinny parts are called wicks. And then the big rectangle parts are called bodies. All right. So now I'm going to share this tab. Now, the thing you need to understand when it comes to price action is there's trends. Okay. So what is a trend? So there's uptrends, and uptrends are depicted by, we're getting higher highs and higher lows, higher highs, higher lows. So from left to right on your screen, you'll see that the price is going up. Okay. And then a downtrend is just the opposite. We're getting lower highs. So here you see a lower high, and then, or a high, and then a lower high, a lower high. So lower highs and lower lows. Okay. So we're going down. And when you're drawing trend lines, you draw down trend lines, you start from the top and go down, and then up trend lines you draw from at least 2 points that are lows. Okay, but you start from the bottom. All right, so that's some basic schmasic stuff. So uptrends, downtrends, and then there's something called consolidation. Consolidation is when price goes sideways. Okay, so it's not going up or it's not going down, and a good example is right over here. Okay, and if this is your first time learning about price action, write this down. Okay, consolidation. Okay, consolidation is when you're in just a range that is really just not going anywhere. Not going anywhere. And a key point here is whenever we break out of the range, which means when we have a bar close above or below the range, then it is a good time to trade. That's called a breakout. Okay, so here, you see, we're kind of not breaking above that high. We get these wicks, but the wicks don't tell us where price is ending. Okay, we finally had a close above this range here, which would be a good entry point for going long. Going long just means that you're buying. Okay, you're buying the stock, you're buying call options, you're buying futures, you're buying. Okay, going long. Alrighty, so that's consolidation, which is just going sideways. Now, the next thing that you need to understand about price action is there are two different types of bars. Okay, there's something called trend bars, and then there's something called non-trend bars, right? And I'd like to show that here. So here, what is a trend bar? So a trend bar is a bar that contributes to the direction of the trend, and they usually have bodies that are 50% or more of the entire range of the bar, end to end. Non-trend bars are really small bars or dojis. What does that look like? So in this example here, you can kind of see. Okay, you can kind of see like, okay, what's the trend bars? Wherever I have my arrows, those are trend bars. Big red bars like that, big red bars. Non-trend bars are like these little tiny ones. They just, whenever you see them, you just see consolidation because price goes sideways. Okay, when you're trading, you want to wait to see, all right, boom, we get a trend bar. It's going to tell you, most of the time it's going to tell you the direction of the trend. That's when you want to get in. So after this bar closes, you want to get in after that bar. You don't really want to get in after these little bars because it's like price is just going to go sideways. You don't know if it's going to go up or down, and we want to know what direction these bars are going. Okay, more examples: uptrend. Look at these big trend bars, and then non-trend bars. When you see the little non-trend bars, price just consolidates. It goes sideways. So don't get in after these bars. And we'll talk about stops and entries in another video. All right. So sharing this tab again. Now some other things about about price action. Okay. This is something nobody talks about. You can only find it really in books. But when you see massive topside wicks, what does that mean? That means that big wicks here at the top of an uptrend. So we're moving up, and then all of a sudden we get these big lines at the top. So what does that tell us about price? Topside wicks equals selling pressure. What does that mean? Whenever you see these topside wicks, there's people are selling at that area. They're saying, this price is too high. So there's a lot of selling pressure to sell. So we're pushing price down. Okay. And then what about bottom side wicks? Well, it's just the opposite. Okay. Bottom side wicks. They're telling you that there are buyers here. And look how cool this is. We literally sit right there. We're sitting right at an even level. Look at these close, open, close, open, right at that same spot. And then we have one big bottom side wick there, and then we have two smaller ones, and then a huge wick right there. So bottom side wicks usually depict buying pressure. And this is when it's at the bottom of a down trend. Okay. And then again, top side wicks here. When we're moving up, top side wicks means, this is the highest we want to go right now. Okay. So then we sell off usually. And then we got to these lows and we're like, this is the lowest we want to go. This price is too low. Then you get buyers coming in, buyers stepping in. Okay. It's called buyers stepping in. Buyers stepping in. And then up here, when you see this, it's like, okay, well, sellers stepping in. All right. Coolio, Fulio. All right. Now the next price action secret type of thing that I want to talk about is going to be micro double tops and micro double bottoms. All right. I want to get a really good example of this. So first one we're going to talk about is a micro double top. What is a micro double top? And what is a double top actually? So what's a double top? A double top is when we have a high and then we start to get some price action and then we revisit that high. That constitutes a double top. Okay. So this was our first top, and then this is our second top. So that's a double top. Okay. Double top. So we got a high and then we came down, and then we go back up. Boom. Well, we're not going to go past that. That's a double top. All right. Now, what is a micro double top? Micro double top. So a micro double top is just what it sounds like. Okay. So it's when you have a close and then an open right next to each other on adjacent bars. And that's different from a double top, because double tops is like, okay, we have a high we put in here, and then a bajillion bars later, or at least 1 or 2 bars later, we have another top. Okay. But a micro double top is when we have a close and an open right next to each other. Why is that important? It's a really good sign of a reversal down. Good sign of reversal down. And the basic reason for it is because buyers and sellers are agreeing at this level that price should not go past this level. For some reason, you'll see it on the chart. There'll be a micro double top, and then it's like an area where buyers and sellers are like, nope, we're not going past this. Nope. And then it usually works really well for a good sign of a reversal when there is also a topside wick. That's crazy, a massive topside wick. So remember, we just talked about that. So massive topside wick, which means equals sellers stepping in. Okay, sellers are stepping in up here. And guess what? We push price right back down here. And then if you notice, like right across from it too, there was another micro double top right there, close, and then an open right next to each other, sending us right back down. We get back up, close, and then an open right next to each other, sending us back down. So micro double tops are good signs of reversals down. Now, micro double bottoms, like this one, is when we have a close and open right next to each other on the bottom side. Okay, so close, open, literally right at the same price point. That's a micro double bottom. Micro double bottom. And notice, if we stretch this across, notice how this is at these key points. These are key levels to me, because look at that. We have this huge wick here that stopped right at that same point. So that's telling me that there are buy orders in this area, which basically means anytime we hit that level, boom, we hit that level, boom, we hit that level, we're going to react, because there are algorithms, or some hedge fund has AI that says, hey, when we hit this specific level, buy for me, buy for me, buy for me. So boom, it hit that level once, boom, we hit that level twice, and we hit it again and again. And every time it got bought back up, price went right back up. All right. So micro double bottoms are signs of reversals to the upside. I'm telling you right now, take notes. This is going to change your trading forever. Okay. I don't know what ICT, SMC, I don't know what that stuff is saying. They're just talking about gaps and shit. I don't know. But this is like real price action. Big bars means a lot of buying pressure. If it's green, or big red bars show a lot of selling pressure. And then small bars show that we're just consolidating. We're going sideways. Don't pay attention to those bars. Okay. We want to pay attention to big bars. So again, big green bars are a lot of buying pressure, and then big red bars, a lot of selling pressure. All right. And then the closer a bar closes to its high, like for a green bar specifically, the closer it closes to its high, the stronger the pressure. But if there's like a lot of, if there's a big topside wick and a small green, then it's not that strong. But if it's like big green like this, and it's kind of close to its high, then it's going to be pretty strong. And then for these red bars, if it's closing close to its low, then it's pretty strong selling pressure. Okay. But if it's a red bar like this and big bottom side wick, there's not a lot of selling pressure. That's something to keep in mind as well. Alrighty. And then the last thing I wanted to talk about was, we can talk about bullish engulfing and bearish engulfing bars too. What is a bullish engulfing bar? So it's something like this. So when you have a red bar next to a green bar, and that green bar is eating up the little red bar, that's basically showing you that we had some selling pressure, but then the buying pressure took over and ate up all that selling pressure. So we're likely to go up. Okay. And then a bearish engulfing bar would be almost like this. This one, we had a big green bar, but then we had a bigger red bar eating up this little bar, eating up this green bar, showing us pressure is likely to come down. And then a rule of thumb too, that many people don't talk about. I want to show, let's see if we could find it somewhere. Rule of thumb. Not going to find it there. Let's back up just a little bit. Just want a few more actual examples. And this is price action that has taken place over the last couple days. So I want to give really good real life examples. There we go. We got one. And we got them. All right, here we go. So not only is this a example of a what, let's do it like Dora. What is it? No, I'm just playing. What is this? No, I'm just playing. All right, so we have a micro double bottom right here, okay, because we have a close and an open right next to each other. But we don't have a bullish engulfing bar. This green bar is not bigger than this red bar. But what's happening is we have a big red bar coming down. So it's showing a lot of selling pressure, right? But then we stopped right at this price point. And then this green bar starts pushing up. If the green bar pushes up more than 50% of the way of this red bar, usually that means there's going to be a pretty high probability that price is going to continue in the up direction. And it's just the opposite for a red bar, or for a down bar, pretty much. Oh, Jesus. All right, oh my gosh, come on. See if we can find a good example. I can't really find a good example. I can't find a good example. Oh, well. Anyways, but it's the same for the opposite direction. That's all I'm going to do for this price action module. Dang, this is kind of long, 16 minutes. Anyways, it's your boy, Mr. Fit to Flourish. Hopefully you learned a lot about price action, from the basics to some of the more complicated stuff. Double tops, double bottoms, micro double tops, micro double bottoms, uptrends, downtrends, bullish engulfing, buying pressure, selling pressure, top side wicks, bottom side wicks. That's like really good stuff that's going to help you in your trading. Anyways, it's your boy, Mr. Fit to Flourish, and I'm out of here.